All right, smart money gang. Welcome back to the channel. Welcome back to the channel, guys. Today, man, I'm gonna come out, man, and just do a video about what is Forex, guys. I usually don't like to do this. I usually don't like to be simple like this, but I want to be simple like this because I've realized that it's a lot of people that really do not understand or know exactly what Forex is. Even though I tell you guys all the time, right? And you know I tell you guys all the time, right? Y'all can go to babypips.com and you guys can look up this exact information I'm finna give you guys. So big shout out to them. I'm not sponsored by them. I'm not getting paid by them, but I want you guys to know about babypips.com, right? So what we're gonna do is we're going to go to a screen, pull up babypips.com, and then we're gonna go over some of the things that you guys need to know about Forex, right? I know a lot of people at the end of the day probably just don't like reading, right? Uh, I'm a person like that. Like, hey, look, man, I don't feel like doing all the reading. I don't feel like doing all this extra nonsense, man. Just tell me what I got to do, what's going on. I need to be hands on, blase split, right? So what I'm gonna do is I'm gonna explain some of this stuff and try to be a little bit hands on, man. So I love you guys. I'm not a financial advisor, but I am a mentor. I do have a mentor website. I do have a Telegram. I do have a private chat signal group. I do have a free signal group. I do have an OnlyFans. Everything will be down in the description below. But I got to put that timer on. And that was my quick disclaimer. And then boom, we're going to share the screen. All right. So now as I share the screen, man, we got to get serious, right? So get your papers, your pads, your notebooks, get all of that, right? So basically, the first thing I want to start with is what is Forex, guys. And I know I don't have a lot of stuff up on the screen, and I'm actually looking at some trades right now. And my computer is actually moving super slow, guys. So I appreciate you guys for hanging in there, right, with me. So what we're gonna do is we're gonna go to babypips.com. Once we pull up a new tab, Google, go to Google, right? Google.com, guys. Sorry that the computer is just like taking 30 years. Yeah, I need to close some of these tabs out probably. Anyways, right? So now we can go to babypips.com right here. Baby Pips. Now you're like, man, why you ain't have all this together? Right. Bear with me, guys. The computer is really acting crazy. So Baby Pips. All right, see, already there, babypips.com. You see, I'm already looking up things like risk management. You feel me? So basically, what is Forex, right? It's quite simple, right? It's the global financial market that allows one uh, to trade currencies, right, guys? So we're trading currencies against other currencies. So basically, what you guys want to do, man, you guys want to sign up, join, do whatever it takes, right? And then you want to go to education, and then you want to go to how to trade Forex, right, guys? So you want to go to how to trade Forex, go to the school, start your school, unlock tracking, start your tracking, you feel me? All of that, right? So what you want to do is you want to start at preschool, and you want to click on this first course right here that says, what is Forex, right? Online course, basically what is Forex. And we're going to go through like a quick rundown, a quick just a quick basically a quick rundown of everything that they have to offer on this page and how that it's an awesome site, guys. So you got what is Forex. Basically you got the same thing I just told you guys. If you think one currency will be stronger versus the other, uh and you end up correct, then you can make profit, guys. Now it's a little bit more detailed than that. We have lot size, we have pips, which is points, right? Points in movement, right? So we gotta factor all of that in, right? But which they will teach you, right? So basically they saying they got once upon a time, but before the pandemic, guys, we hop on a plane, right? And then we go to the airport, right? We go to a new country, we in another country, right? And then you have to find a currency exchange machine, right? So you have to try to exchange your U.S. American dollars for wherever you're at. Let's just say you're in Japan, right, or China or whatever, right? And you're trying to purchase some yen, right? And you look like, okay, I got a dollar, right? And then your dollar is worth $100, right, in yen, right? So you like, okay, dang, I got $10. I'm about to be rich. I'm about to get lit, right? I'm about to be up 1,000 something plus, right? At the end of the day, that's the same thing you're doing with Forex, right? It's just over the counter. We just don't have to be like right in their face exchanging the money in the airports. We can actually do it from our phones, guys. So basically so it's a and basically you're doing it for exchange rates, right? So it's a you go up to the counter and you notice a screen displaying different exchange rates for different countries. Now, I don't know if you guys ever been out of the country or if you've been out of the country when you were younger and your mom usually have to do this type of stuff, or when you were older and you maybe went to Canada or Mexico and you had to exchange the money for yourself. You probably went to a gas station, so it was probably simple. You probably got cheated out your money. Because like I just told you guys, you're playing in the foreign exchange market every time you trade a dollar for a different currency. All right, so an exchange rate is the relative price of two currencies from two different countries. Okay, so that's all the exchange rate is. You're making your money off the exchange rate, the back end, right? So let's say right here, I gave you the same example. You find Japanese yen and think to yourself, wow, my $1 is worth 100 yen and I have $10. I'm going to be rich, right? So when you do this, you'll essentially participate in Forex, guys, regardless of whether you think you're doing it or not, but you've exchanged one currency for another, guys. So that is basically Forex. All right. Um, um, so assuming, right, you sold the dollar and bought yen, before you fly back home, you stop by the currency exchange booth to exchange the yen that you miraculously have remaining, right? So you in Tokyo, whatever, right? And you notice the exchange rates have changed, right? Okay, so now the exchange rates have changed. It's these changes in the exchange rate that allow you to make money in the foreign exchange market. So most people, they really try to take, like, okay, they try to buy it at a lower, at a cheaper price, right? And then they want to just basically sell it for higher, right? So just say one of your bucks is worth 200 now. So one of your so $1 is worth 200, right? Remember, you got $1 for 100, but now it's worth 200, right? And you had $10, so you had $1,000, right? You didn't spend no money while you were there. And let's just say you went to go exchange it, right? You went and stopped somewhere else and you exchanged it back to US dollars. Now since the rate went up to $200 for every one American dollar, you will now have $2,000, guys. So that's how you came up. You just really made your percentage 100% come up, because when you went to go take the money back and trade it back in, it was worth $200 for one American dollar than it was one for 100. So therefore, your exchange rate uh, was one extra $1,000, guys. So you just made 1,000 turn into another 1,000. So that's $2,000, right? All right. So by that being said, what is Forex? The foreign exchange market, which is usually known as Forex or FX. It's the largest financial market in the world, right? The FX market is a global decentralized market where the world's currency change hands. Exchange rates change by the second. So the market is constantly fluctuating, guys. So it's constantly in a flux, right? That's exactly what that means. Only a tiny percentage of currency transactions happen to real economy involving international trade and tourism, like the airport, right? So that was the same example that I gave you guys. If you were in Tokyo, you went to China or whatever, and you exchanged your money, right? So currency traders, also known as currency speculators. So that's what we're doing. We're speculators, guys. We're analyzing the charts, right? So when you go over here, to these charts, right, you're basically analyzing these charts to try to see what is the next move, what makes sense, right, guys? You're trying to see, um, you know, should you buy or should you sell? Okay, guys. So I'm just giving you, okay, Euro USD, right? So that's a currency pair, right? So now you're either feeling that Euro is going to be stronger than USD, then that's when you go for the buy, or you feel Euro is going to be weaker than the USD and you go for the sell. So you got a base and a quote, guys. So the first one is a base. So Euro is the base and the USD is the quote. So you always either buying the base against the quote or selling the base against the quote, guys. So like I just told you, I'm gonna do a little bit of back and forth, jumping back and forth, just because I really want you guys to understand it as visualize it as I'm explaining it to you guys, so you really can understand in full detail, right? So basically, so we're speculators, right? We buy currency hoping that they will be able to sell them at a higher price in the future, right? So basically that's what analyzing is. That's what spectating is. You're looking at the market, you're trying to see, you're taking judgments off of structure, price action, maybe a correlation. Maybe you're taking it off of probability. Maybe you're taking it off a bunch of confluences, guys. I don't know why they try to make me click on that ad. Yeah, baby pips, y'all slick. I see what y'all doing, man. I love the content though. But yeah, so compared to a measly 22.4 billion per day volume in the New York Stock Exchange, right? So that is a session, guys. So the New York Stock Exchange, that is a session. It starts about noon, right? And it ends at about 7, right? 7, 8 o'clock. Okay, guys. Comment if I'm wrong, but like I said, that's usually the time, and that's the New York session. So it's a measly $22.4 billion per day, right? Just in the New York session alone, right? So the foreign exchange market looks absolutely ginormous with its $6.6 trillion a day, guys. So this is what's going on in the market. This is why you're able to make big moves in the market, be able to actually make that big money that you see a lot of these mentors doing, because they don't really care about your little 500, 2,000, 3,000, 6,000, whatever you feel in your mind, or, hey, the market is against me. They don't even think of you guys. Basically, the banks, the big banks, guys, the big banks, right? The big companies is what really moves the market, man. Even $1 million, even if we had a measly $1 million, if they call in 22.4 billion measly per day, measly, just believe your 5, 600, 700 um, is not really, they don't care about that, guys. What you have to really learn how to do is put in the work, actually put in the work, and then actually make those and catch those big moves like those companies are doing, guys. So basically, um, this is just a rundown. They'll give you guys a rundown. They'll let you guys know, okay, the New York Stock Exchange, 22.4 billion. Then you got the Tokyo session, which is 18.9 billion, and then you got the London Stock Exchange, which is 7.2 billion, guys. But what they don't like to talk about, which is a fourth. It is a fourth session, guys. It is a fourth session, and it's giving me a brain fart right now because people rarely talk about it. But I'll come back to that. I'll come back to that for you guys. But it is a fourth session, guys. What is it? Anyways, guys. So those are the main three, right? The New York, the Tokyo, and the London. And then I think it's the Sydney. I think it's the Sydney, guys. If I'm not mistaken, you can, like I said, you can leave a comment in the comment section if I'm wrong, right? So the market is open 24 hours, right, a day, right? Only 5 days a week. So you have to be careful at closing out a lot of your trades by 4:30 Friday, guys, but maybe by 4 or maybe by 3:30, guys. Where I'm at, I'm an hour behind, guys. So that's why I have to be able to close my trades a little bit beforehand or whatever. It's probably all the same time, but just from that time difference, I always try to do it an hour early, before the markets close. I try to like end all my trades on Saturday. Now you can hold the trade over the weekend, but like I said, all that will come with time, guys. If you're not being able to hold trades 2 or 3 days in a regular weekday, just hold off on that. You could trade maybe like cryptocurrencies and things like that over the weekend. But yeah, I will hold off. I will try to close all trades before Friday, guys, because the markets do adjust over the weekend. Um, so all right, so here we go. So it say the day starts when traders wake up in Auckland, Wellington, right? Wherever that is. Then moves to the Sydney. All right, so that's what I was saying, the Sydney, Singapore. Then we got the Hong Kong, which is the Tokyo, then the Frankfurt, which is the London, and finally New York, right? Being trading starts all over again in New Zealand. Okay, so remember, guys, time is going to be very important. Session is going to be very important. All of this stuff that Baby Pips is trying to show you guys is very, very, very important, guys. Just know that. So that is very, very important. So basically, man, what I gave you guys was the total breakdown on what is Forex, right? Um, Now, what is trading in Forex? The simple answer is money, right? Specifically currencies, right? Because you're not buying anything physical, Forex trading can be confusing. So we'll use a simple but imperfect analogy to help explain, all right? So think of buying a currency as buying a share in a particular country, right? Kind of like buying shares in companies, right? So the price of the currency is usually a direct reflection of the market's opinion on the current and future health of its respective economy, right? In Forex trading, when you buy, say, the Japanese yen, you are basically buying a share in the Japanese economy, guys. So when you buy USD, you're basically buying, just look at it like, hey, I got stock in the United States. All right. All right. That's what it's, you know what I'm saying? Baby Pip's telling you, right? So it's not me, right? You are betting that the Japanese economy is doing well and will even get better as time goes, right? So you're putting in a piece of stock and you're praying that, hey, it's going to keep rising, right? So in general, the exchange rate of currency versus other currencies is a reflection of the condition of the country's economy, right? Compared to other economies, right? So later on, when you guys go through here for yourself, right? And then when you start to get catching on to trading and things like that. So we went over like analyzing and being an analyst and being a spectator, right? You're gonna have to worry about fundamentals, guys. So fundamentals is gonna come up and it's gonna be very, very, very important. So you guys gonna have to remember that fundamentals is very, very important as you see right now, because we want to know how the country's economy is. So we want to know about inflation, all like anything that can spike the numbers up or spike the numbers down. All right. So now we got major currencies, right? So while there are potentially lots of currencies, so you got major currencies and you got minor currencies. I'm gonna just go over that real fast, and then I'm gonna give you a complete breakdown from what Baby Pips is telling you guys. All right. So while there are potentially lots of currencies you can trade as a new forex trader, you will probably start trading with the major currencies, right? So you really want to try to get these major currencies down pat so that you can understand why is price moving in a certain manner, right? If you understand that there are major currencies and minor ones, right? So the major ones are CAD, which is Canadian. Then we got GBP, right, which is the British pound. Then Euro, we got European. We got JPY, Japanese, AUD, Australian, NZD, New Zealand, CHF, Swiss franc, and then we got the USD, United States, right, guys? Those are the major currency pairs, right? Then they label them, right, and commodity currencies, right? So they got this code, they got all this, they show you nicknames, buck, fiber, yen, cable, Swissy, loony, Aussie, Kiwi. These are all just different names you might hear different mentors say, guys. So the NZ is usually the country name. That used to be the first two. The first two letters are usually the country name. Then the currency name usually be the third letter, right? So, New Zealand dollars, right? For the D, right? So, like they say, NZ stands for New Zealand, and then the D stands for dollar, right? So, you got some of them that are very different. You got Swiss francs, so they end with the F. So, you see the CH and the F is the for the dollar. They got francs. They don't call their money dollars, okay? So, that's just quick facts, understandable. So now we go on to the next course. See how you can breeze through this very, very quickly. So you got buying and selling currency pairs and things of that nature, guys. And I'm probably going to put that in a part two because I know I'm way over my time. I really want you guys to actually look at these videos, watch these videos, and everything like that. So really, what I want to go over now, because I promised you guys, I really want to go to the charts so I can basically explain everything that they were saying, and on the charts and make sense for you guys. So let's just say we was on Euro USD and we was at this point right here. We felt like, okay, let's sell Euro USD because I feel like Euro USD is going down. Basically, what you're doing is you're saying that the euro is going to be weaker than the United States, right? So if the euro is going to be weaker than the United States, you're going to try to base this sale, right? And then you're going to try to get rid of it at a later time where price is worth more money. You get it? So if somebody's buying it way down here at this point, when you already sold to this point, by the time you get out, a buyer is stepping in, okay? And they're going to buy it from you at a certain point where you make your money off the exchange rate, all right? So basically, that was that broken down, right? So now you got different time frames, right? You got different 4 hour, 5 hour, whatever hours and whatever time frames, right? On the charts that fits you, right? That works for you, that fits your personality. If you like checking the charts every minute, then you need to be a scalper. You need to go in minute charts and look at minute movements and just learn how to, learn how to dominate that. Learn how to be the best at that, right? If you want to look at it at a 15-minute time frames, every 30 minutes, whatever you want to do, but dominate it. Understand the time. Understand when those candles are going to end. So this is a 4 hour candle. This 4 hour candle ends in 10 minutes, guys. So understand what time frame you want to trade in. Why you want to trade in that time frame. What's the reason? Figure out your why, right? And then figure out your currency pairs that you want to track down and trade. Okay, guys. So basically, then that was a sell example. Here go a buy example. So we finna push price up. We're above our moving averages, and we want to buy now. Basically, we're saying, hey, look, Euro USD, Euro is finna get stronger than USD. So that means Euro is finna their economy is going well. And I feel like, hey, you know what? It's gonna fluctuate to the upside because buyers are gonna step in because of the simple fact price is going Euro is getting better, stronger, uh stronger in currency as far as the USD. Okay, so it's getting stronger than there, so that's when I'm gonna go for the buy. All right, so hopefully a lot of that stuff actually made sense to you guys. Basically the currencies, the countries are the countries, right? So Euro is a country, the USD of course is a country, right? So we understand that. Let me see, I'm just trying to think of everything you guys can understand. Okay, so the exchange rate, so right, that's the price difference. So okay, you bought at 20,000 and then you bought it at 20,000 and then you sold it at 22,400. All right, so you sold it at 22,000, right? So that is the exchange rate. So what you did was make money off the points, right? So every movement is a point, a pip, right? So for every pip, right, you gained money, right? So you use the lot size, right? So you actually put in a lot size and you actually gain points from the lot size, right? So with that being said, if you were right, so if you went for the buy and you sold it from 20,000 to 22,000, then therefore you make the money off the exchange rate. All right, so we went over that. We all know it's a 6 trillion market. We all know about the different sessions, 4 different sessions. Um, we all know that the market is open, what, 5 days, right? 24 hours, but it's open 5 days out the week, right? Monday through Friday, right? And we all know that the market closes down at 4:30, okay? Uh, Trying to think, all right? And I pretty much went over that. We go to the next session, the trading, we trade money. We all know that. That's the lot size. We already went over that. We know about the major currency. So Euro USD is a major currency pair. GBP, USD, major currency pairs. Okay, guys. So we understand that. Um, and then we understand, okay, so the first two letters EU, the first two letters is the actual country, and the R is the actual money. Uh, is the actual money. I think it's rubies. Is it rubies, Moot? What do the European get? Rubies? I know British get pounds. They get pounds. So that's for the P. Oh, euros, guys. I'm so sorry, man. Euros. I said rubies. But euros. So the R is for euros, guys. So they get euros. And so US is with the D, they get dollars, right? So boom, we understand that. And then, man, that's pretty much for this lesson, man. I'm proud of you guys that actually watched the video all the way to the end. And I know a couple of you people are going to run over to babypips.com and then run it up, man. Y'all can go over there and check it out so y'all can understand all the, the slang, the talk, whatever you want to call it. You'll actually know how to, you'll know what people are talking about when they're talking to you about certain things. In the Forex market, you'll know what the Forex market is. You'll know what a base and a quote is. I even threw that in there. Those don't come on to later in baby pips, but I threw that in there. And like I said, each week I'm gonna try to break down different points of Forex for you guys, because I know a lot of people, some people just like me, I don't not like reading. And so in video form, I feel like, okay, boom, I can push this knowledge out for free the same way Baby Pip's doing, and educate some of my people who actually coming into the course and actually wanting the mentorship and actually want to dig that deep down inside and then actually shorten that curve and actually just boom, straight hit to the bag, right? All right, man. So you already know what to do, man. The descriptions, everything gonna be in the description below, man. Like, share, subscribe, tell a friend to tell a friend. And you already know, man, SMSFX, man. Let's get it. Gang. SMSFXmentors.com, man. It's gonna be in the description. All right. So y'all know what time it is, man. Gang, 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 gang.